When someone asked me, how much will XRP be after the lawsuit?
700 billion and $1,300 billion.
Welcome back, ladies and gentlemen. This is the Bearable Bull here. And I got this aggressively average content for you today. As ladies and gentlemen, I am currently in Le Petit Fromage Airport in Paris, preparing to meet with Madame Lagarde to tell up to flip the damn switch for XRP. And while that's clearly a joke, I have a lot to say today. First and foremost, remember how much has been going positively in Ripple and XRP's direction. You know, at this point, I genuinely think it's low IQ if you're someone in the crypto space who refuses to invest in XRP because you're self-righteous and because you think it's still a scam or worthless. That is a low IQ mindset to have. And I think quite honestly the writing's on the wall for XRP to outperform most of the crypto market the next bull cycle. But one thing I do want to bring up is I sense that Ripple's getting close to an IPO. And I think it's 100% possible that they'll owe the SEC $0. What's actually crazy is there was a tweet from John Deaton that he posted yesterday that stated the people who've argued the SEC got a 50-50 victory in Ripple's case are wrong. It was more like 90-10 in Ripple's favor. And if Ripple ends up paying $20 million or less, it's a 99.9% legal victory. I'm on that boat as well. I think Ripple is extremely close to being in a favorable position moving forward. And I also think that they're preparing for an IPO. Now that doesn't mean it's going to happen tomorrow, next month. But I think at some point in the later half of 2024, Ripple will possibly IPO. A couple reasons why. They've been acquiring companies and buying stakes like madmen. Remember when Ripple acquired a stake in Bitstamp? Remember Medico, Fortress, and all these things that Ripple and XRP have been doing. Amendments will be coming to the XRP ledger that will unbelievably explode the ecosystem. The Zahu ledger is live as well. And I think our community needs to realize what a powerful position we are in. Never before have we had such an opportunity to get rich from not just XRP, but in Ripple the company. And all of you need to understand how fortunate we are. Now let's also think about this for a second. There's been major banking problems, not just back in March with Silicon Valley Bank and other bank failures, but recently, banks like Bank of America, Wells Fargo, and Chase. We're beginning to see major deposit issues today. And I think these problems will continue to show face in the coming days, weeks, and months. Remember that November is going to continue to be an important month for the future of XRP adoption, as I've been pointing to this month as a major time frame for when serious updates are going to be happening. And XRP's been reacting. XRP reached as high as 65 cents today. And all of you tell me if it doesn't excite you that our favorite digital asset is not just making strides with the news, with partnerships, with legal victories, but also gradually with the price. I think this price rise will continue into next year. And I do believe 2024 will be the year of XRP. Mark my words. I stand on that. Now, in addition, ladies and gentlemen, Blockchain Backer shows how the DXY has taken a hard tumble through 106, marking more strength for the dollar and likely more opportunity for the crypto space. When the macro is supporting the crypto industry, oh baby, we're gonna see a fireworks display. And as long as the rumors of a Bitcoin ETF are in the air, we'll continue to see more and more bullish momentum. I still think it's very possible that when the Bitcoin ETF gets approved, that will mark the top or very close to it. But regardless, that is still left to be determined. And finally, before we get into the macro for the day, I just want to let all of you know that the Bank for International Settlements are going to be hosting a regulatory summit for DC FinTech Week, November 6th through the 9th. Augustus Carstens will be speaking along with numerous regulators and other powerhouses in crypto. A lot of them connected directly to Ripple, by the way, including Brad Garlinghouse, Sheila Warren, Vice Chair of Supervision at the Fed, Michael Barr. But look at who's attending this conference as well. Gary! Oh, Brad is gonna give Gary the business, my friends. And I pray to God that I want to see one thing. I want to see Gary and Brad Garlinghouse on stage together on the same panel. And Brad Garlinghouse give Gary the business with the double middle fingers, fuck the SEC in the air. 'Cause he deserves it. Gary has been taking a beating. And every single regulator and crypto company on the planet hates him. I'll be tuning into this conference without a shadow of a doubt. And I highly recommend all of you do so as well. Now guys, as I pivot your attention to the macro, I'm gonna play you this clip from Jungle Inc. letting us know what the Fed is doing. To cover the cost of interest on historic levels of debt, the money printer is turning, running around the clock. $2 trillion a month and climbing. This will not be sustainable. China, Japan, and other historic buyers aren't interested. And this is what people need to realize. We're in pivotal times. And in my opinion, there will be a two-sided coin to the inevitable destruction we have to face. And I'll be explaining to all of you what those two sides are. But first, I want you all to take a listen.
Numbers are staggering, and by the way, it's not like they're going down. Because of the cost of the interest now, and people don't factor in, do you know for the last 10 years, the average interest rate on bills was 0.82%. We're going to issue bills this week at 5.60. So think about what's happening. The debt service, the cost of Treasury grows. What happens is you have to issue more debt, and so this is a big deal for going. I mean, $2 trillion a month of gross issuance, $500 billion a week. The numbers are staggering. It's part of why I think rates will stabilize here. I think you need to see the Fed start to bring that rate down, which I don't think will happen in the second half of the year. But you know, we're going to get to buy these yields at these levels.
So the supply is staggering, but the demand may not be. But the Chinese apparently are not buying as much as they used to. The Japanese are not. The banks are not for whatever restrictions. Who's buying all this stuff?
By the way, so you hit the two of the big ones. You missed one. The Federal Reserve in 2020 bought $2.5 trillion. 21 they bought $1 trillion. Fed's not buying, they're selling. The banks, like you say, not buying, they're selling. And actually, I would argue international is net selling. Who buys it all? What has to happen, and I think what will happen over the next year or so, is households will increase their holdings. So they're buying bills today, clearly, through money market funds and outright. What I think will happen in the next year or so is if Fed starts to cut rates, people say, gosh, I want to lock these yields in. Then I think people will start to go out the yield curve, and you'll start to see the households have to buy it. But that has to happen.
Now, ladies and gentlemen, there you have it. The money printers will be forced to turn on. They will cut rates again at some point. And with that will come a seismic crash into the inevitable hyperinflation that I've been predicting. Guys, this is what I want all of you to be aware of. The two sides of a coin towards the inevitable destruction we're gonna face are either inflation and two, the inability to buy assets and the inability to buy basic utilities for us, the citizens, or massive financial crash, massive recession. Either way, us, the normie, we suffer. These are our options. No ifs, ands, or buts about it. And none of these options are good. But this is what I have to say. The people in power, they will, without a shadow of a doubt, prefer inflation so they can continue to spend. They could continue to buy up assets, see the assets appreciate in value with the money they give themselves, and watch as everyone else suffers, as UBI, Universal Basic Income, comes to replace our wages. Compound that with the continued adoption of AI, and you have the perfect storm into the slavery that will ensue for the average Joe. But in addition, guys, something I do want to stress is something Stan Druckenmiller stated on CNBC. We are ending the era of American exceptionalism into a level playing field on the world stage. We won't be the great superpower in the world because of the collapse of the dollar, because of the rise of other nations, because our culture has been crippled. And I think Stan Druckenmiller points out when all of this started.
But is there any way around monetizing these debt levels? Is there any way inflation is not here to stay?
Yeah, we could have a
Long term?
look. I don't have to worry about the long term, my day job, but
Right.
but I will say this: we could have an event. I don't know whether. Hopefully, it's not a war of major powers that bring us together, and you get sacrificial behavior like we got after the Depression and the World War II. We could have a financial crisis due to everything I've been talking about. And finally, my generation, I think Paul Jones made the point, we've given nothing. We've given nothing. And now we want to screw our grandchildren. Finally, we get the memo. So no, I'm not that pessimistic. And I'll say the other thing I'm optimistic about.
The election?
Jerome Powell normalizing interest rates.
Yeah.
We now have a hurdle rate for investment in this country. So I think the allocation of capital, ironically, if we don't go to the zombie route, and if we don't continue the drunken stuff, ironically, I think it could be a force for good, because instead of funding a bunch of nonsense and bubble stuff, the capital gets more properly allocated. So, look, I'm open-minded to a really bad outcome, and I'm open-minded to a decent outcome.
But we need to
I'm
get
just,
we need to
look,
cut entitlement. We
I'm
need to
here
cut
today
entitlement.
not to talk about Janet Yellen. I'm
Right.
here today, guns and butter this morning. I could have written it. By the way, I didn't. We've got to stop, guys. We're drunk. We're digging this deep hole. What are we doing here?
And that's the point I wanted to make. American culture. We've become entitled. We were founded on building, working, creating, innovating. Now we're entitled to things we don't deserve. We're being outworked and outclassed by the rest of the world. And if we don't snap our fingers and snap out of it, we're surely destined for a bad fate. Now guys, to cap off this video for today, I'm gonna yet again leave you with this clip from Peter St. Ong, who I've had on my channel before and who I highly recommend you follow, as he gives a great PhD level analysis on what's going on the planet and in the macro environment. And trust me when I say, if you follow him, you'll gain a better perspective on what's going on in the world. He states the IMF says inflation will last for years now, after Janet Yellen stated it was transitory. They also now predict years of stagnation to go with it, caused by rate hikes that are failing to stop it. We are caught between a wedge and a hard place. Decrease rates have crippling inflation, or keep rates where they are and have a brutal recession. We're gonna face pain one way or another. And that's why I have XRP as my financial life raft to help me escape the problems that are coming. Their solution is more government spending. Our solution is XRP adoption. I believe out of the other side of this, the XRP community will become the new 1%. And I pray that all of you have been paying attention. Ladies and gentlemen, this is the Bearable Bull here. Thanks for tuning in. As always, I appreciate every single one of you. Now I'll be back tomorrow with another video.
Transitory inflation just got a big extension as the IMF came out with its latest global predictions, now saying that global inflation will last for years. Specifically, they forecast that 2023 inflation will come in at almost 7% worldwide, and it won't get much better in 2024 at almost 6% worldwide. Note, that would make it 5 years and counting for this very transitory inflation of ours. Also note, the IMF has consistently underpredicted inflation. They work with central banks after all, so it could be even worse. To go with all that inflation, the IMF is now also predicting slow growth worldwide. In other words, we are looking at stagflation on a global level, with growth barely keeping up with population in the rich countries, averaging just 1.5% for 2023 and falling even lower in 2024. They predict particular weakness in Germany, which is deindustrializing fast, Italy, which is a financial basket case, the UK, which is barely keeping afloat, and for Japan, which seems to be ramping up its heretofore leisurely descent into oblivion. The anemic growth, of course, is tied to the inflation. After printing so many trillions to buy lockdowns, the world's central bank cartel chose to crush the private economy instead of turning down the government spending. The problem is crushing the productive economy is not doing the trick. With inflation now rising again, so just 3 months ago, for example, the IMF was predicting 5.2% global inflation next year, and now they are closer to 6%. So every bump in inflation means more strangled credit down the pike, taking growth and jobs down with it and deepening global stagflation. Now, given the IMF works for governments, naturally they do not blame government spending nor the money printers. Instead, they obediently blame the victim. So tight labor markets, meaning workers asking for a raise, or inflation expectations, meaning workers, companies, and households raising prices to survive inflation. So what's next? Brought to you by Unchained. What's next is inflation is increasingly looking like it will stay for years. It has already gone from a 2-week visit to moving in and redecorating the living room, all whilst organizations like the IMF are drooling at their chance to make it worse. How? In the very same report confessing that government-fueled and central bank finance spending is driving the world into stagflation, the IMF lists out recommendations filled not with controlling spending in central banks, but with central planner fantasies about yet more inflation-pumping government spending. These central planner utopias include a renewed push on the green transition that replaces cheap fossil fuels with comically expensive renewables, along with plans for potentially trillions going to, quote, increase resilience and improve food security, which are both code for handing trillions to poor countries. Both would naturally raise inflation and slow economic growth, but let no crisis go to waste. In short, our ruling clowns are finally admitting they broke it, that we are in for years now of stagflation, and their solution is to break it some more. As for the rest of us who pay their salaries and suffer their policies, expect slower growth and higher inflation for years to come. Last time we were here in the 1970s, we got lucky with Paul Volcker, who finally fixed it with drastic rate hikes. This time, we could be waiting a lot longer. Okay, we'll be watching. See you next time.